Welcome to The Explainer. Okay, so today we're tackling this huge disconnect. It's at the very heart of this global crisis. You've got Washington telling you one thing, and Wall Street's money telling you something completely different. And those two stories, they're about to crash into each other. Let's get into it.
So on one hand, you have the official story. It's coming straight from the White House, right? The message is super clear. This is going to be a quick, decisive victory. This will be over in 2 to 3 weeks. That's the promise. But then, you look at where people are putting their actual money. On Polymarket, a platform where folks are betting on real-world events, there's only a 10% chance that the Strait of Hormuz reopens this month. And you have to understand, that's the world's most critical oil pathway. So, a 10% chance? That's not just doubt, that's the market screaming, no way. So, who do you believe, the politicians or the traders? This massive contradiction is really the key to understanding all the chaos we're seeing in the global economy right now. We've got to dive into these paradoxes because, trust me, what should be happening is not what's happening. All right, first up, the oil paradox. We're talking about a huge disconnect in black gold. And this is where things start to get really weird because oil and stocks are behaving in a way that just, well, it breaks all the rules. I mean, look at the facts. They're crystal clear. The blockade in the Strait of Hormuz has sent oil prices through the roof. We're talking about Brent Crude hitting its highest point in 16 years, way over $100 a barrel, touching almost 140. That's a huge shock to the system. Okay, so basic economics 101, right? There's this thing called inverse correlation. Basically, when oil prices spike, stock prices are supposed to fall. It just makes sense. Higher energy costs squeeze company profits, people have less money to spend. Historically, it's the perfect recipe for a stock market crash. And yet, nothing. The S&P 500, the NASDAQ, they've been surprisingly tough. I mean, they've wobbled a bit, but they haven't broken. They are completely ignoring that historical playbook. So the million-dollar question is, why?
Well, if you ask Wall Street, you get a few different theories. One idea is that the market has already priced in an end to the conflict, even though oil prices are screaming the opposite. Or, and this is a bit more cynical, maybe the market just ran out of people willing to sell. It could be that investors are just completely tuning out the political talk, treating it all like background noise. And this crazy disconnect isn't just happening in traditional markets. Let's pivot to our second section, Bitcoin. It's kind of like the eye of the storm right now. In the world of digital assets, well, it's telling its own fascinating story. So while everything else is on edge, Bitcoin is just sitting there. It's in this state of tense calm. We're in what you'd call a risk-off environment. That's when investors are supposed to be running for the hills, selling risky things. But Bitcoin, it's refusing to crash. It's just stuck in this range between $60,000 and $70,000. But this slide shows you what's really going on underneath the surface. The price might look flat, but the money flow tells a completely different story. You've got $1 billion in new stablecoins coming online. That's basically fresh cash ready to buy. At the exact same time, massive amounts of Bitcoin are being moved off of exchanges into private cold storage wallets. This isn't people panic selling, no way. This is big money playing the long game, buying up what they can and holding on tight. But don't let that surface level stability fool you. This brings us to section 3, alarms under the surface. Because if you look closely, the cracks are starting to appear. And there are 3 really important stories that aren't getting a lot of attention, that just blow that whole everything is fine narrative out of the water. First up, there's a panic brewing in the private credit market. Now, a lot of people don't really watch this space, but think of it like a shadow banking system just for companies. It's a massive, multi-trillion-dollar industry, and it's where a ton of corporate debt is hiding. And here is the flashing red light. A huge investment firm, Blue Owl Capital, just had to slam the brakes on withdrawals. Why? Because investors tried to pull out a staggering 40% of the fund's entire capital. 40%? That is a classic bank run, folks. And it's a massive warning sign about how much cash is actually available in the system. Okay, second big crack, the U.S. jobs report. This is supposed to be one of the most important pieces of economic data we get, right? Well, investors are now basically ignoring it. So the latest headline number looks great, right? A gain of 178,000 jobs. But the market's reaction was a shrug. And here's why. The last 11 reports in a row have all been revised down later on, sometimes by a lot. At this point, the numbers have lost all credibility.
Many investors think the data is just unreliable, maybe even politically motivated. And think about what that means. If you can't trust the official data, you're basically flying blind. And third, that official story about military unity, about how this is going to be a simple, clean operation, yeah, that story is falling apart from the inside. And we're not talking about some minor disagreement here. 3 very high-ranking U.S. generals have just been forced to retire. And the reason, according to reports, they stood up and directly opposed the White House's plan to send ground troops into Iran. That is a huge deal, and it completely contradicts the public story of a quick, easy conflict. So, what in the world are we supposed to make of all this? That brings us to our last section, navigating the disconnect. It's all about figuring out what's signal and what's just noise. Because right now, the official story and what's actually happening on the ground are worlds apart. You know, this whole situation is really a masterclass in telling the difference between noise and signal. The noise, that's all the political speeches, the tough talk, the optimistic timelines. But the signal, that's where the actual money is going. It's what the markets are pricing in. It's what insiders, like those generals, are willing to put their careers on the line for. Which leaves us with one final critical question to think about. In a market full of contradictions like this, where does the truth really live? Is it in the words people are saying, or is it in where the capital is actually flowing?